right, people, what's going on? Today is February 13th, Monday, and we are mid-market day. You can see it right in front of us, what we are doing. The bull pressure is on today, but I'm not here to talk about that right now. I want to give a update on the market as far as where it seems or could be heading based on technical analysis. I did promise that over the weekend, but I wasn't able to get to it. So here we are. All right. So what I have in front of us right now is actually the S&P mini SPX, because all of my other SPX charts are full of gobbledygook and stuff. So I don't want to confuse anybody. I want to start with a clean chart. So we are going to use the XSP to give us what we need. So let me back out first. I like to start from a zoomed out type of perspective so we can get an overall feel of what's going on. So first thing I want to do is this right here is January 2022. And I want to start drawing some trend lines based on that, because that is going to be relevant for us going forward. So the first trend line is going to be here. This is going to give us our breakout point that we achieved a couple of weeks ago. And then the second trend line I want to draw is this trend right here. I think this is a very, very important trend. We're kind of away from it right now, but I do think and suspect that we will be coming back to this and running into it at some point. Could be as early as the end of February, or could be later than that. All right, so we've got that going for us. The next line I want to draw is this particular trend line right here. And we're going to draw a trend line like that. This is a shorter term trend, but it does establish a new pennant pattern that we are in right now. And I could even do one like, say here, something like that. So we fell out of our initial channel that we were in, just barely, but this could actually widen out the channel from here. So if we say that we're establishing a new channel because the market did bounce off of this price level right here, then we could potentially be establishing just a wider channel to stay in. So a couple of other things I want to do is establish some price levels, some key price levels. And we're going to, let's see, grab horizontal. Move this over here. And let's get some key price levels going. Let's see. So we're going to start from right to left. So first one, we're going to establish this low right here as a price level. We're going to establish this high. These are our most recent highs and lows. We are going to then look to the left because there's no more highs to consider until we get off the screen. As far as lows, we can pop one right here at this swing low, and pop one probably, I'll actually just say this bar right here. And let's get a little bit zoomed out, and we're going to pop a couple more key price levels here. We don't need to use that one. We've already broken that. This gap fill, this is actually getting close. So right there and right there at this swing high right here. So these are kind of our key levels based on the way I see it right now. So I'm actually going to zoom in to the 5 minute. And with that in context, we're going to kind of see where we are, where we might be going, and some key levels to look out for. So now that we're zoomed in, we've got a couple of more levels that we can look at here. As far as this week is concerned, from what I can see, where the next stop would be, I'd say this level right here, because it seems to want to bounce off of that level and go lower. And also definitely this swing high right here. So these are the levels that we're going to want to look out for currently, in addition to our pivot points that we always look out for. You actually don't need that for this particular piece. So where we are today, the market definitely wants to get up to 4150, the 4150 areas. It did touch 4140, which is another area that it definitely wanted to get to. But we're looking for the 4150 areas on the top side. We could breach that if we get some good news, or the market likes the news from the CPI tomorrow morning. And we could actually, based on the volatility levels, get up into the 4200s, the 4220s even. And I'll show you what I mean. Let's move this. So if I look at the volatility levels for tomorrow, you can see the expected move is 68 points. I like to trade at double the expected move, which is like 120 something points away from where the market currently is right now. If you map that out on the high side, we're looking probably in the 4250s for 2 times the expected move, and the expected move is going to be somewhere around the 4190s, somewhere around here. And on the low side, you're looking, right around this area for the expected move, and then double that is going to be down in this range, the 3980s. Now, if we go back to the chart and look on the low side for the 3980s, that is not even on the screen right here. That's going to be way down here. We'd have to break 2 support levels and then land right back on top of our beginning of the year level right here. This diagonal line goes all the way back to January of 2022. So we have to break all the way down to here by tomorrow for that to happen. I don't think that's going to happen. I think it's more likely that if we do break down, if the news is bad, we'll probably break down maybe to this trend line right here, or we'll stay in this rising channel right here, but it'll still be negative. We still have some space to add some negativity based on this. But if we get some good news, we've got a lot of levels that we could break through, and a lot of places that the market can find a happy equilibrium to kind of sit at for a day or two based on a good positive number. So we'll see what happens, but these are the levels that we're looking out for. I don't think that we'll get past, honestly don't think we'll get into the mid 4220s, but we could. I just don't think that is likely. I think if we do get a good number, we'll probably test this high right here and pair this high or something like that. But we'll have to see. It's before market opens, so we'll get to see it before the market even opens up, and then we can make some plays based off of that, and just kind of see where it goes from there. So that's kind of my feeling. I think that we're going to stay within this rising channel for the week, unless news drives us otherwise. But I think this is the most likely path in this kind of direction, upwards and slightly to the right here for now. And as far as news, what we have coming up, we've got the CPI, we've got core retail sales, and we've got PPI, the big stuff. We don't have any bond auctions that I can see. And the big one is honestly the CPI. So we'll see what happens for that. We do have to just keep one little bit of an eye out for our FOMC members, because you never know, especially with the CPI coming out, they could say something that day that, the market pays attention to. So we do have to keep our eye out for that all the way up until about 2 o'clock. So that is our market update for now. And stay tuned, because on my next video, I'm going to be talking about keeping losses small and getting out of your trades if you get into trouble. And also, I found this really cool website, and it is awesome. Very, very awesome. Love it. So I might spend a little bit of time talking about this as well. It definitely helps for picking a good spot for placing your trades. So that's it for now. Stay tuned for the next one.